What's good, everybody? Welcome back to another video. Day 16 with your boy of journaling the process and just understanding the markets, man, and understanding ourselves and just growing as traders. If you're new here, welcome. I welcome you here. Hope that this content finds you well and that it blesses you. So let's get into it. As you guys know, I told you guys I was not going to trade my personal account until I knew where price was going. I was trading the paper trading accounts. I still was using, price action to my advantage. But the market was very rangy from Monday. From Friday, Monday, we just had up and then down. And then Tuesday opens up below. So we're back inside that range. And then Tuesday, we break out of that range. Wednesday, we come here and we have this bullish candle as well, and my plan for today was to take out this high up here, but we failed to do that. So going in the day, I was going for longs, and tomorrow I'm still gonna go for longs, but there's something that we have to observe here. We just have to see how this wick reacts here. We have a wick right here. Above that wick we have a nice high, so those are the things that I'm looking at. We closed above the wick right here, so we're definitely gonna call for higher prices. But I'm going to just put on the daily levels. That way we can get an idea of what we were looking at today. I was looking at this fair value gap with alongside the long that is here. I mean the buy side liquidity that was here. So I was going to long price, long NASDAQ all the way up to these buy side liquidity points. One of the biggest key levels that I had on for today was also 20,500. Using institutional levels as well. So this is the first time I'll probably pull it out during this journey, these videos. But yeah, I'm using institutional levels. So anything that's like quarter, like 250, 500, 750 to 1,000, I'm using those levels as a big, institutional levels that affect price. And today, that's exactly what happened. The whole morning I was calling up to above this high, 20,500 best case scenario. I wanted them to also see them take it out here. But just in case they came down, my low-hanging fruit setup was going to be that 2,500, and they hit 2,500, and then what a tongue twister. They decided to tank the market. Okay, so we have these levels here. Fair value gap, nothing special. We've been saying this for a minute. Buy side liquidity points. Yesterday's high, which was Wednesday, and then Thursday's high of like 2 weeks ago. And then, of course, we had the 2,500 level, which is the big institutional level. Big level. So now I'm going to go down to the 4-hour. Opening up. This is a beautiful lesson. So if you guys want to listen and tune in and really take notes here. This is very, very, very important. This is going to explain why this is one of my rules for trading, especially when I'm looking at a trade opportunity. This is very, very, very important that you guys would pay attention in this specific segment of the video. In the 4-hour, we have this rejection block here, okay? We see that these candles are failing to break above or go above this particular rejection block. They retrace back down into this fair value gap. 8:30 news, we see it happen. They scream lower. We're not part of any of that. We're not trying to be inside the move because news is out. We're not trying to do any of that. We're just looking at how price is reacting during that opening range. All right. So what I want you guys to take away from this is that we've been bullish on NASDAQ. We see that NASDAQ broke above the range that it was stuck in on the Tuesday candle. And go back to the daily to show you guys what I'm talking about. This candle right here, the Wednesday candle, we broke outside of the range that we have down here. We repelled away from this liquidity level. We have these buy side liquidity points available to us. So we're leaning on bullish prices, not only because of that as well, but remember, we also guys have interest rates suggesting that NASDAQ would go higher, because if the interest rates are being cut, that means dollar seeks yield. So dollars going lower, Although right now dollar is decoupled, I will say, but Nasdaq is supposed to go higher fundamentally. We will not let DXY distract us. That intermarket analysis only works when we are symmetrically opposed. If we're not symmetrically opposed and the market is decoupled, using DXY as an indicator just says that something is off about DXY, nothing else. It doesn't speak on Nasdaq. Nasdaq is supposed to be bullish right now, fundamentally. So we're looking at this fair value gap below market opening price, and we get to talk about a beautiful signature that I like to use in my trading. Notice how we come down into the fair value gap. Consequent encroachment is resting right there. What you had to do in this moment is tell yourself, well, if they're going to repel away from this level, any PD array, any time frame that you pick, it takes 2 candles to bounce from a level. Sometimes it could be 1, and that would be inside a breakaway gap. When the breakaway gaps form on the smaller time frames, a lot of the times it's possible that you could see 1 candle that punches into the fair value gap, then leaves, and then closes bullish. So there'll just be like a wick, like a quick stop hunt. Those trades are amazing, phenomenal, but we are on the 4-hour. Also, just with our proximity to the market opening, why would they do that? Unless they were really trying to leave price behind. But it's rare to see a 4-hour order block or a 4-hour candle to pierce into this and just be gone. That is very rare, and you're going to see that signature more likely on smaller time frames. I'm not saying that it can't happen on these larger time frames, because inevitably all of them move the same. But on the 4-hour, your job was to be like, all right, there has to be a candle that punches into the PD array, and then there's a candle that repels away from the PD array. They don't take buy side liquidity that was very close to us at market open. Instead at 8:30, they come lower. You guys know that this is the Judas swing. Period. Point blank period. You guys know that this is manipulation. Why? The context is that Nasdaq is bullish. We have the initial pricing into 8:30 is a large bearish run. That is all the manipulation. All the manipulation. Those who shorted in the market this morning got destroyed. This is not a short market. This is a bullish market. The order flow is speaking to you guys. So if this is the candle that pushes away, that punches into the PD array, that means that I'm expecting the next candle, the next 4-hour candle, to come and take out the buy side liquidity and be the one that goes higher. So automatically I'm saying to myself, as this candle is forming, when does the next 4-hour candle open? It opens up at 10 a.m. Your job was to wait closely to like that 9:55 a.m. time or 9:50 a.m. 10 minutes before the new 4-hour candle opens. You can trade long opportunities. Matter of fact, I'll be so keen to show you guys that I said that this morning, that I would go on my Telegram to show you guys that I'm not bluffing when I mention these things. It's not to pat myself in the back, but it's just to show you that I believe in this and that I have the confidence of those things that I'm saying. So we're gonna go to my morning thing, and I said, I said it's normal that you have no trades, whatever. Draw this level, 20,500. It's at 9:30. I said look at the 4-hour fair value gap. Wait to enter any longs. 9:55 is your time. After that, your probability increases for a sustainable run higher. At the moment, we are respecting the consequent encroachment of the fair value gap, but the 4-hour candle has to close. Wherever 10 a.m. open is, it should be on your chart. Okay? This 8:30 news that caused a huge short is the manipulation and is the Judas. We are below midnight opening price, which means we have all the ducks in place. All the ducks in place for what? We have all the ducks in place to see price go higher. We are in a high probability day trading environment. When we are below midnight opening price, we have buy side liquidity on the higher time frames above us. We are below that. We are in discounted price. We're respecting the consequent encroachment of a 4-hour fair value gap. These are all the things that should ring a bell to you, like, oh wow, this is high probability. if I had to name this setup, if I had to give it a grade, this is an A plus setup. This is an absolute A plus setup, and this is a trade that you can bet on, that you can put some size behind. I say this to myself, so when I go back to this video, I also recognize this specific signature and price will and can make you all the money that you want. Point blank, period. So there's a candle that punches in. This is the first candle that punches into the fair value gap. Then there's another candle that repels away from that PD array. So 10 a.m. opening price was going to be that candle. We already anticipated that. So what we're telling ourselves is between 950, 955, we are going to look for a long opportunity at that time, because it would mean that they would set up the long a little bit before, prior to that new 4-hourly candle opening. Check it. Let's go down to the 1 hour. And as you guys can see, you could refine if you wanted to, but I'm going to stick with the higher time frame fair value gap. Why? Because the higher time frame PD arrays hold more authority. They are parent to those time frames that are minor. The 1 hour comes below the 4 hour, and the 4 hour is a parent to the 1 hour. Does that make sense? Hopefully it does. Let's go to the 5 minute. On the 5 minute, we see that this is 10 a.m. You could draw a vertical line before all of these candles form here. You draw a vertical line, and you tell yourself, well, before 10 a.m. opens, or prior to 10 a.m. opening, those last 10 minutes, what liquidity area could they take? A lot of you guys were probably looking at this consequent encroachment, but you guys longed it too early. There was sell side liquidity down here. Remember, before a large expansive move higher, especially with this run that was possibly going to be, it's 175 points that it was, you guys want to be cognizant that in order to have a large move that is one-sided in that nature, sell side liquidity must be paired for them to go long. That is a principle that you must have internalized and you must understand before we can continue on with this particular trade idea and conversation. So we have this 10 a.m. opening price. We could set a horizontal line here for 10 a.m. opening price. What do we see? Another signature in price. We have this liquidity here. At 9:45, they take out this liquidity. Now listen to me, guys, very carefully. Whenever you expect price to go higher, whenever you see this specific signature, I want you guys to pay attention very closely. Remember how we talk about overnight session and how particular sessions are ranges, particular candles are ranges, sell side liquidity taken, buy side liquidity taken. That is your range, correct? So there has been a way for me to identify how candles can act as overnight session and how we can treat them as ranges in price. Correct. How do we do that? So the way that we do that is by identifying a sell side liquidity or buy side liquidity. In this example, we're going to use sell side liquidity because that's what's available to us here. We have this sell side liquidity, right? This candle that is large and sponsored to go down to the sell side liquidity, this candle in itself is a range. Pay close attention. Sell side liquidity taken, buy side liquidity taken. That is your overnight session range characteristic in one candle. So this is a range. Then when they come down and they take the low of this candle, I automatically start to think this is a very, 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 very big probability that this is a reversal and that the session or the range has been taken. So the overnight session candle, the sell side liquidity was taken, so now they're going for buy side. So at that point, I knew price was ready. So let's look at a little further on how that looks like on the smaller time frames. All right. So I'm going to leave these two lines here. Let's make them bold and black. I'm going to do that. We're going to do that. bold and black. Okay, so we have both of these, sell side liquidity and buy side liquidity. This candle acts as overnight session. That is very key, guys, very key. You'll see in a second what I mean. If we go now down to the 1 minute, we add all the 1 minute sauce in there. Let's look a little bit here. So prior to 10 a.m. opening, we take out the sell side liquidity. This minute is the last minute inside that 5 minute candle. When this candle takes out the low of this, remember, this is the overnight session. The overnight session candle ends when this new candle opens. We take out the sell side, then we reject, we come back inside the range. That already gives me so much information. It tells me the probability of them reversing, okay? From this low to this high. This is sell side, this is buy side. So now we can do this. This right here is your overnight session range, the same way it's played. Now I can take this off. Sell side liquidity taken. Now buy side taken. This is an overnight session range, okay? Now we reverse back into here. Sell side liquidity, let me erase one of these. Sell side liquidity here. We have a fair value gap right at the liquidity. Now, who in their right minds would sell this fair value gap? You're selling a fair value gap in discount. It doesn't make any sort of sense. It doesn't make any sort of sense to sell this, especially with the context that we're going higher. When they're preparing for 10 a.m., they take out this low. Then inside, this is another model. Pay attention, guys. A propulsion block that forms inside of a potential inverse fair value gap is a high probability propulsion block. I'm going to say that one more time. Liquidity is taken. Right where liquidity is taken, there is a potential fair value gap that could potentially become inverse. Why do we know that it could potentially become an inverse fair value gap? Well, because it's a fair value gap that is in deep discount. We are below midnight opening price. There's the context. You know the buy side liquidity is higher. This is a very low probability fair value gap to sell. If you sell this fair value gap, you are in big trouble. We're coming into that 10 a.m. hour, which is the new 4-hour cycle. So they come, take out this low, go higher. They form a propulsion block, which is an order block that's on top of another order block. So this order block was formed here. This is the order block that sits on top of this order block. This is our propulsion block. Propulsion blocks that are formed inside of an inverse fair value gap is high probability because it's like a pause before them doing the propulsion higher. Okay, so we took this long here and we just had faith that price is going to continue higher. They were setting up the stage at 10 a.m. As you guys could see, they formed this fair value gap. Consequent encroachment, we respect it. Then we come above this market structure shift here. They come back down to 10 a.m. Look how we reject away from 10 a.m. Look how we reject away from 10 a.m. That is not random. I show you guys 10 a.m. every single day. We continue this every single day. Liquidity is taken. They find a way to go higher again. We now reach into the daily fair value gap discounted level. So this is the low of the fair value gap on the daily fair value gap. Okay. So them not being able to break above this was my cue to close this trade because I was just trying to lock in what was going to, help me capitalize. I was already up like $140. I let them come down to like 117 or 120, whatever it is. And I was like, you know what? They're not showing me the probability that they just want to break through this fair value gap. How did I know that? Well, we came into this fair value gap here that stood above a high here. This right here is a break on structure. We're waiting for this to continue higher. This should have been explosive if this was high probability from this point on, but they return back into it. They repel away, come back into the discounted level of the fair value gap, and because of that, I decided to close because I did not want to strain out my mental capital. I had caught over like 250 ticks there's no need for me to be greedy. I just have to make sure that I am, growing the equity curve slowly. There's a level of maturity that comes with that. But then, of course, over time, they took it higher to our particular levels that we were looking for. Remember this. We wanted that first buy side liquidity target to be hit, which was Wednesday's high. They came up to Wednesday's high, and then at 2,500, exactly at 2,500 level. Remember, I said this at 9:30. This happened here at 12:16. They decide to reverse exactly at the 2,500 level for the day, and we end the day stuck between bullish order flow and bearish order flow, because this is a bearish fair value gap up here on the daily, and this is also a bullish 4-hour fair value gap. So you guys could see how they are struggling in between each other. So what we do now is be patient for tomorrow or this Asia. I will be on this Asia. I will be trying to look at how the market is playing. I am done for the week. I have made my returns. Next week is going to be a phenomenal week for many reasons. But this week is over for me. I am done. I only took one trade on my personal account. Guys, I promise you guys, I am done. There is no need for me to want to yield more out of my personal account, and that is it. If I had to give this day, as far as my execution, as far as my confidence, as far as my game plan, if I have to give this day a grade to it, it would definitely be an A+ day. I also want to show you guys how this is midnight opening price. We had this correlation at 8:30 when they scream price higher. We hit it, then we scream lower. You were not going to be part of any of this. Let it go. Let it not be part of you. Okay? We have this sell side liquidity here. I'm thinking at 9:30, they might possibly run it higher. I wasn't going to be part of this though. They stay inside the 4-hour fair value gap. They come take the sell side liquidity. Then we have the accumulation candle. They take out the sell side liquidity, then they go higher. And then we take our profit here. You guys will see my entry and the P&L for the day. That was the only trade of the week, so 1 out of 1, we're good. So yeah, that's it, guys. There's a couple lessons that I want to teach you guys. I want to talk about that propulsion blocks that form inside of an inverse fair value gap. I want to make a model on that. I want to make a model on the market structure shift fair value gap. So keep yourself posted. Tune in, share this with your friends, people who are struggling with trading and finding a model or an opportunity to trade. I want to thank you guys all for tuning in. God bless you guys all. I hope you have a phenomenal Friday and a great rest to your weekend. Please understand that weekend is where we build. The weekends is where we build our empire. So if you guys aren't taking the time out of your week to back test, to collect data, please collect data on weekends. Please, for the life of me, I beg to you guys, focus on this skill. Do not waver your faith. We spoke about this yesterday, and how a lot of us waver our faith in this trading stuff. How about we own our mistakes? How about we become accountable in what we do, and that we would continue to strive for what is right and what we know in our hearts to be the most beautiful thing, that we would provide for our family, the freedom to do whatever they want to do, the freedom to go wherever we want to go, the freedom to not work for anybody, the freedom to not commute to a regular 9-to-5 commoner job. All right? So God bless you guys all, and keep working on your skill set, and I promise you guys that we would see the end to this. We would see where we're supposed to be. I love you guys. Good, better, best. Never let it rest till your good is better and your better is best. God bless you guys. I love you guys, and we pray those things in Jesus' mighty name. Amen. God is good all the time. All the time, God is good.